For decades, the US dollar has been the undisputed king of global finance, right? It was the ultimate safe harbor for pretty much every central bank on the planet. But tonight, well, that throne is shaking. While the West has been looking elsewhere, a new titan isn't just playing the game anymore, it's literally rewriting the rules. So we're gonna dive deep into this silent revolution and really try to uncover the forces behind it. This isn't just some market shift. This is the result of a strategic masterstroke that's been years in the making. A plan where Beijing is systematically, piece by piece, taking apart the old financial order and replacing it with something stronger, something more resilient, and something designed for a whole new era of global power. What we're witnessing here is a fundamental change in the world's financial architecture. China's going from being a passive player, just stacking up US dollars, to an active architect, building a whole parallel system. And the goal? Well, it seems to be to insulate itself from American economic pressure, and in doing so, offer the rest of the world a new safe haven. So how does a revolution like this even begin? It starts with a headline you've probably seen popping up everywhere. China is dumping the US dollar. The story basically says that Beijing is in the middle of this massive multi-year sell-off of US Treasury bonds. The very bedrock of the global financial system. But is that what's really going on? This question right here is the central mystery we're going to unravel today. On the surface, yeah, the numbers look dramatic. They suggest a rapid retreat from the dollar. But as we're about to see, the real story is so much more sophisticated and, frankly, way more ambitious than just a simple sell-off. Okay, so take a look at this. What's really fascinating here is the trend line for China. Its holdings of US Treasuries have absolutely plummeted to around $638 billion. That's the lowest it's been since 2008. When you think about it, coming down from a peak of over $1.3 trillion, that's a massive reduction. So the headlines, they're not wrong about the numbers, but they are missing the most important part of the story. Because this isn't a panic sell. This isn't about trying to crash the dollar. This is step one of a much larger, much more calculated strategy. And to understand it, we have to ask the next logical question. Where is all that money going? And our first clue? It lies in a vault. For over 15 straight months, while China was very publicly reducing its treasury holdings, the People's Bank of China was on a historic gold buying spree. This isn't random. It's a deliberate pivot to a timeless, safe haven asset. Now, this move is about way more than just diversification. It's a direct response to what analysts call the weaponization of the dollar. You see, when the US and its allies froze Russia's central bank reserves back in 2022, it sent a shockwave through the entire world. For countries like China, the message was crystal clear. Your dollar assets are only safe as long as you stay in Washington's good graces. Gold, on the other hand, it doesn't have that kind of risk. It's a physical asset you can hold in your own country, totally immune to foreign sanctions. But just hedging with gold was only one part of the strategy. The real masterstroke, the move that left Wall Street completely speechless, happened in the bond market. In November of 2025, China issued its own sovereign bonds in US dollars. And what happened next? It challenged the fundamental laws of modern finance. The demand was just staggering. For a $4 billion bond offering, the world's largest investors placed orders for over $118 billion. That's almost 30 times oversubscribed. This wasn't just some casual interest. This was a massive global vote of confidence in Beijing's financial credibility. And this table right here, this illustrates the crucial point perfectly. Just look at this data. China, with an A+ credit rating, which is officially lower than the US's AA rating, was able to price its bonds flat to US Treasuries. Okay, impressive enough. But then in the secondary market, something happened that had never happened before. The bond started trading at a yield 35.5 basis points below the equivalent US Treasury. Let that sink in for a second. The market was effectively saying that lending money to China was now safer and should therefore pay less interest than lending to the United States government. This is a historic inversion of huge proportions. And who was buying all this? This wasn't just some regional thing. Sure, Asian investors were the majority, but a quarter of the demand came from Europe and a significant 16% from the Middle East. And here's the kicker. 42% of the buyers were sovereign institutions. We're talking other central banks and sovereign wealth funds. The world official money managers are actively looking for an alternative to US debt, and it looks like they found one in Beijing. So let's connect the dots here. China is selling some treasuries, buying up a ton of gold, and issuing its own debt at rates that actually beat the US. This isn't a retreat from the dollar. It's what analysts are calling a sophisticated reconfiguration. And it all starts by solving the mystery of those disappearing treasuries. So that whole dumping narrative, it's kind of a distraction. A huge chunk of the reduction in China's direct holdings isn't from selling at all, it's from moving. It's a process called custodial migration. Essentially, China is shifting its US Treasury bonds from accounts in the US to custodial accounts in neutral third countries. Think Belgium or Luxembourg. They still own the bonds, but the legal jurisdiction changes. It creates this operational layer of protection that makes the assets much harder for the US to freeze or seize. And this migration, it's just the first pillar of a much bigger four-part strategy. Pillar 2 is building a whole new financial infrastructure, like their CIPS payment system, which is a direct alternative to SWIFT that already connects nearly 1,500 institutions. Pillar 3 is forging new alliances, especially with energy producers in the Middle East, to create the so-called petro-yuan and challenge the oil trade's reliance on the dollar. And the fourth pillar, which is absolutely critical to making all this work, is getting their own house in order with a massive debt swap to strengthen the credibility of their own government bonds. And this brings us to the ultimate endgame. See, China's goal isn't to destroy the dollar-based system. That would actually hurt its own export-driven economy. The goal is to create a parallel system, a multipolar world where the dollar's dominance is balanced by other credible alternatives, and where Washington can no longer use its currency as a unilateral weapon. You know, this transition from a unipolar to a multipolar financial world isn't happening in a vacuum. There's a perfect storm of factors that are accelerating this shift right now, pushing global investors to look for alternatives faster than ever before. First off, there's growing uncertainty about America's own financial path. Threats of new tariffs and a ballooning national debt are fueling what investors call a debasement trade, which is basically a global search for assets that can hold their value if the dollar weakens. Second, ongoing geopolitical conflicts can create a perception of instability. Some analysts suggest that while the US is being viewed as being involved in various disputes, China is positioning itself as a more stable economic partner. And finally, all of this comes together to redefine risk itself. For a growing number of global institutions, the true risk-free rate is no longer found in Washington, but in Beijing. While the evidence seems pretty clear, the silent revolution has succeeded in its first major objective, breaking the monopoly of the US Treasury as the only risk-free asset. Now, this doesn't mean the dollar is going to disappear tomorrow, but it does mean we're entering a new, more complex, and definitely more fragmented financial world. The only question now is, what does that world look like? This silent revolution is just a perfect example of the powerful, often unseen forces that are reshaping our world, and uncovering them is really our core mission. Thank you so much for joining us to understand this incredible shift. But now we want to hear from you. What's your take? Do you think Chinese debt is now the new global benchmark of safety, or are the risks still just too high? Drop your thoughts in the comment section below. We honestly read every single one. And if you found this explainer insightful, do us a huge favor. Hit that like button and subscribe to the channel. That way you'll never miss an update on the stories that are truly moving the world. Thanks for watching, and we'll see you in the next one.